Now, the last session for today's Asia-Pacific zone addresses the challenges of investment exits in Southeast Asia. Rajeev Natarajan, Managing Director and Head of Asia-Pacific at ICONIQ Capital, will moderate a panel of fellow investors and corporate leaders. The panel will consist of Nash, Managing Partner and Co-founder at Asia Partners, C Group's Chief Economist, Santitarn Sathirathai, Warburg Pincus's partner and managing director, Saurabh Agarwal, and Steve Melhuish, co-founder and former chief executive officer at PropertyGuru Group. Let's now go over to join Rajeev and his panel of distinguished speakers to learn more about how to help exits in Southeast Asia.
Well, hello, everyone, and welcome to what we hope will be an interesting and highly engaging topic amongst leading investors, entrepreneurs, and operators within the Southeast Asian ecosystem. My name is Rajeev Natarajan, and I'm the CEO for Asia Pacific for ICONIQ Capital, a privately held firm that serves some of the leading entrepreneurs, families, and institutions around the world. Our topic today is catalyzing exits in Southeast Asia, a particularly relevant conversation for a highly vibrant and entrepreneurial region full of interesting opportunities, but also associated challenges. Today, our four panelists come from a very diverse set of backgrounds and experiences, and to that end, I'm pleased to welcome them here. So before I kick off, perhaps I'll have each of them provide a short introduction of themselves. So firstly, Steve.
Thanks, Raj. Hi, I'm Steve. I'm a founder with 3 startups, most recently PropertyGuru, which is a leading online prop tech company in the region. We're across 5 countries, about 1,300 staff, profitable, growing fast, and used by 25 million people every month now. I personally manage my own exit from that business by hiring and handing over to a CEO after a 3-year succession plan. I'm also an LP and venture partner with Wavemaker, one of the leading and most active VCs in the region, with a portfolio of about 130 companies addressing predominantly an underserved B2B and deep tech market. And also had 12 exits in the last 3 years through the portfolio. I'm spending most of my time also as an angel investor and a mentor to companies in the region, so about 26 companies. My key focus there is around climate change and social impact. I'm really happy to be here. Thanks, Raj.
Fantastic. Thanks, Steve. To you, Santi.
Hi, thanks, Raj, and hello, everyone. My name is Santitarn Sathirathai, but you can just call me Santi. I'm a group chief economist and senior management of C Group, which is the parent company of Shopee e-commerce, Garena global games company, and C Money, run the payment and fintech in Southeast Asia. So those are our 3 key businesses. And before joining C, I've been working at one of the global banks as the head of emerging Asia economics for almost a decade. Good to see everyone here.
Fantastic. Thank you, Santi. Saurabh?
Thanks, Rajeev, and hi, everyone. My name is Saurabh Agarwal. I'm a partner at Warburg Pincus in Southeast Asia. Just a little bit of background, Warburg is one of the oldest and largest global private equity firms in the world. We have about 55 years of investing experience, and today we have about $60 billion of assets under management. We also have about $15 billion of dry powder to pursue opportunities of different shapes and sizes across the globe. Asia is a core part of our franchise. We've been in India and China for about 25 years. In Southeast Asia, we've been investing for the better part of the last decade. And as it stands today, we have invested or committed about $3 billion across 14 or so portfolio companies. As it relates to exits and monetization, which is the topic of this panel, as a firm, we have led IPOs, about 200 IPOs across our portfolio, including 3 in Southeast Asia, Wincom Retail in Vietnam, Techcombank in Vietnam, Converge in Philippines. All 3 of these IPOs were the largest IPOs in their respective country at the time of listing. So that's a little bit of background. Pleased to be here and looking forward to the discussion.
Likewise, thank you, Saurabh. And then lastly to you, Nick.
Thank you so much, Raj, for organizing this, Rajeev for organizing this, and thank you to the MAS as well for facilitating what's going to be a great conversation today. Very quick background, originally Asian American, moved to Singapore in 2011. I was the group president of C Limited, Santi's wonderful organization from 2014 to 2018. Led the IPO of the business, and in 2019, along with 5 other friends, co-founded Asia Partners to go at the heart of the Series C and Series D funding gap here in Southeast Asia. We made our first 3 investments. We're always looking for wonderful entrepreneurs to support and nurture, to help on their journey to ringing that bell on the New York Stock Exchange. Outside of work, my wife and I have 2 small children, and we're very involved in mathematics education from a philanthropic perspective.
Fantastic. Thanks, Nick, and thanks all for those introductions. Before we dive into some specific detail, I thought it'd be helpful to, given the theme of today's conversation, to get to some level of specificity around what exit actually means. Obviously, it means different things to different people. It could be acquisitions, it could be roll-ups, it could be buyouts, minority investments, such as what we do, or it could be capital markets activity in the form of a public listing. So we have some fantastic operators and capital allocators here with us on the panel. So perhaps, Steve, I'll start with you here for your thoughts around how you definitionally think about what exit actually means for you.
Yeah, thanks, Roger. It's an interesting question. It's one that I get quite regularly, particularly from startups. And I guess it's such a heterogeneous word, and it just means different things to different people, depending on whether you're a founder or whether, you know, investor or an employee. And I guess, you know, many people view it as a binary, you know, milestone or outcome, you know, a trade sale or IPO. And I guess, you know, thankfully we're seeing a lot more of that activity taking place in Southeast Asia in the last few years. But in many cases, you know, it's not a binary exit. You know, in many cases, it's the start of a next phase. And is that really an exit then, or is it a start rather than an exit? In many cases, it's an evolution of the business and a growing up of the business, or a transitional perspective. You know, so certainly from my own point of view, you know, as a founder who also managed my own succession plan and therefore exit from the CEO founder role to going onto the board, you know, that was an interesting process. But also, I've seen you know, exits take shape in form of, for example, secondaries. You know, as a kind of a phased approach to liquidity, and also, you know, kind of risk reduction, whether it's with the founders or the investors and employees, you know, via those secondaries. So I think it's, you know, it's kind of a bit nuanced, and I think depending on who you're talking to, it means different things. You know, if I look at my early stage investors at PropertyGuru, they made a 52 times return on their initial investment, but, you know, has PropertyGuru had an exit? Well, you know, it's up for debate, I guess. But you know, different people will view it from different perspectives. I guess the good thing is that we're seeing a lot more activity from an IPO and M&A point of view.
Yeah, to your point, Steve, around the fact that it's not necessarily a binary outcome, and it's certain evolutions and events in the company. Santi, your sort of thoughts and perspectives on this now that you're operating a very large and successful organization, in terms of that definition?
Yeah, no, thanks. Yeah, I think it's a very important and interesting question, right? And I think what Steve has mentioned that really struck with me is you can also see it as the beginning of something. And so for me, I think it's kind of analogous to thinking about, say, students you know, graduating or finishing college. And there are many ways to finish college, right? You can graduate it and get a formal certificates. You can actually even get a job before finishing graduating in college. And there's different ways to do it, and different for different people. And I think when you view it in that lens, the question really becomes less about whether you get the certificates, but it's more about whether you acquired the right skills, the learnings that to really start, and what you do with those skills. Can you contribute back to the society with that? And I think that's the same thing if you flash back, look at the business side. That's ultimately the question. Do we have the right ecosystem to build the business? And from an entrepreneur perspective, do we have what it takes and capabilities to really build a sustainable, scalable, and ultimately successful business?
So Santi, let's stay on that particular topic, because I think it's particularly interesting from your lens. Obviously, C Group now is a $90 billion plus market cap organization. And one of the things we often get asked in this community is, what are the features and characteristics of building a sustainable business here in Southeast Asia that's now become global, obviously? And can you perhaps shed some light on what you've seen and what could be helpful for entrepreneurs and other businesses here in the region?
Absolutely. So first of all, you know, I'm not sure if there is such thing, sort of magic formula that you can say. And I think for us, even for us, you know, there's still a lot definitely that we have to learn through our journey. But I think through the journey so far, there's a few things that we have picked up that it hopefully is helpful for everyone. And I think 3 keywords come to mind. One is strategy, execution, and adaptability. So strategy there's many parts of that, but it's about being the right market, it's the right product, the right timing. And I think for us, Southeast Asia is really the right market for us. It's our home market. It's a very exciting place with huge potential, growing economy, rapidly growing economy, even faster growing digital economy. And despite many years of growing at amazing clips, you still have very underpenetrated markets. Like take, you know, online retail as a share of total offline retail sales. Even after the recent boost, it's only about 5 to at best 7% of total offline market, which is, you know, very far from what we've seen, for example, in China, which is 30%. But at the same time, it's also not an easy market to navigate because it's not a market. It's different markets, very diverse regions. So you have to bring whatever global ideas you may bring. You have to localize it heavily to really suit the local conditions. And I think that brings me to kind of the E word, which is, you know, execution. You have to have the right setup to really implement all those strategy in these countries. Take, you know, Shopee, for example. We have 6 versions of the apps in 6 Southeast Asian markets we're in, all different. And we have local offices, local people, talents who understand the local context, economy, constraints, as well as, you know, the right partners to work with to really execute and carry out the strategy. And last but not least, adaptability, because this is a very dynamic region. So you always have to constantly fine-tuning, changing, collecting data, and I think ultimately stay very humble and listen to your customers so that you keep improving, fine-tuning your products and services. So 3 things, SEA, strategy, execution, and adaptability. Just so happens.
It just so happens to align to the acronym for the company too. So that's fantastic. I just want to, you mentioned localization, execution. I want to sort of shift gears a little bit more towards an investor's perspective now. And in that context, you know, what areas from our most talented investors in the region, what they're focused on currently. You know, this could be specific geographies, it could be sectors or specific themes, or all of the above. And so maybe Saurabh, I'll start with you on this one. What are you seeing here in the region and what excites you the most across markets and sectors?
Sure, Rajeev. Happy to share some thoughts here. Look, as you know, we're big believers of the Southeast Asia opportunity, right? So the macro fundamentals are extremely strong, and the demographic trends in most countries across the region are very, very positive, right? So if you take the region as a whole, and I agree with Santi, these are different countries, but some of the trends, underlying trends are all sort of, you know, similar with slight nuances, but, you know, 700 million people, very young sort of, you know, population, consistent and real GDP growth. And I think real is important, right? When you look at Vietnam, the manufacturing sector, you look at Philippines, the BPO sector, you know, all of these things are driving a rise in the middle class, you know, the rise of the mass affluent. And it's really interesting to combine that with, you know, the underpenetration that's typical of emerging markets. It creates a very interesting backdrop. And, you know, we're seeing opportunities across financial services, TMT, real estate, and even sort of some of the consumer-driven sectors, you know, healthcare, education, and what have you. The other area that, you know, we're spending a lot of time is what we call the new economy, right? So the increased digitization, mobile penetration, internet penetration, you know, in this region. And as we all know, this is only accelerating with COVID. You know, lots of interesting businesses in fintech, you know, digital banking, digital payments, tech-enabled business, and what have you. So quite interesting, you know, opportunities, I would say. But the overall trend that's sort of fueling these opportunities to us is the rise of the mass affluent that we think is a very powerful trend in the region. You also asked, Rajeev, a little bit about which countries, and I think Some of these trends, play out in different shapes and forms in our priority countries, Singapore, Vietnam, Philippines, Indonesia. But what's key for us is to be really selective and disciplined, right? So in essence, when we're looking at businesses, a few things that we're looking for is one, a proven business model, or at least a proof of concept. Second, a clear and robust path to profitability. And I can't sort of stress on this more. It's really, really important. And in many cases, also, important is, in our case, a potential to be a real market leader. And that, we have seen kind of pays dividends and creates sort of real kind of scarcity value. So that's hopefully gives you a little bit of a flavor on how we think about the region and what excites us here.
No, that's super helpful, Saurabh. I obviously would love Nick's perspective on this as well, given what he's doing with Asia Partners. Do you agree with Saurabh, and any other comments on this particular question?
I think it's probably right, and thank you, Rajeev, for that. Let's divide it into geographic focus, and then let's turn to sectoral focus. From a geo perspective, we have a fairly opinionated, but perhaps right, perhaps wrong view. When it comes to tech in Southeast Asia, there's only two ways to build a business geographically. Either you go regionally from a home base in Singapore, as Lazada, Sea, Grab, Red Doors, others have done, or you focus solely on Indonesia. But I think the days of a solely Philippines or solely Malaysia or solely Vietnam business that will eventually go public are nearing an end. So there's a very strong point of view we have on that, really from a scale perspective. From a sectoral perspective, I think what's been very interesting for us, and our first three investments align with this point of view, so we put our money where our mouths are, so to speak, is the verticalization of e-commerce. I'm so proud of what Sea has done with Shopee, and I think the next generation of e-commerce will be a little bit more fine-tuned to specific verticals. So we have a play in budget hospitality, we have a play in education. We're about to announce one next week in a similar sort of vein, verticalized. But if you're looking for what comes next, let me just offer a hint. We did some interesting data mining just a few days back. We looked at everybody on the planet that has APAC, Asia Pacific, or Asia in their job title. It's part of their job title, head of APAC, whatever. Turns out 29-30% of those people on the planet sit in Singapore. That's fascinating. So we conclude from that Singapore has, in essence, become the capital of Asia from a business perspective. And moreover, that the opportunity is in Singapore to create broader businesses, not just Southeast Asia, but particularly from a tech perspective, seeing that many pan-Asia Pacific decision makers in Singapore suggests that the next wave is going to be enterprise software, because there's so many people that can make a buying decision around a Asia localized software package that there can't help but be very many significant software businesses anchored out of Singapore in the coming decade.
Thanks, Nick and Saurabh. I think both those comments are really interesting, and we'll come back to some of these. But if you take a step back and try and understand what some of the key changes and evolutionary impacts we've seen across the region in the last few years to help catalyze some of these changes, I'd love to sort of touch on this a little bit more. It could be regulation. We spoke about verticalization, the mass affluent consumer, and so forth. Santi, you from a C perspective and particularly a multifaceted business across Southeast Asia, would love your perspectives on what the positive changes have been in the environment, the external environment, that have allowed these businesses to really shape and grow and evolve.
Absolutely. I think there's so many positive changes we have seen underpinning the very healthy growth in digital economy the past few years. Of course, one is a well-known one is the rise of mobile phone penetration, which give people access to internet. But I think somewhat less documented or less mentioned is another part, which I think is very interesting, which is a growth outside the metro area that start to see users who might be up in the mountains and high islands in Thailand or in remote islands in Indonesia have access to internet. And that's really starting to see a lot of growth and a lot of usage of e-commerce and other services start to pick up. I think it was last year, a Google Temasek report saying that they project the next 5 years that the growth in the outside metro area, like outside Jakarta, outside Bangkok, these will be actually about to grow twice as fast as inside metro areas. So I think that's quite exciting. The other area which I think is quite exciting is also in the policy space. So I think the governments around the region has been very active in trying to improve the ecosystem. And then the two areas that I see in particular, one is around digital infrastructure, which of course part of it is just expanding access to internet, but the other part is more the soft kind of infrastructure as well, things like digital ID, things like Mindful we have in Singapore, which provide an important layer and foundation for you to do eKYC, for you to really expand and add on digital services. The other area is around the digital skills, and there's both the kind of the breadth dimension and the depth. The breadth is around how do you get people, entrepreneurs, to learn to do e-commerce or e-payments or using the basic applications just to really improve and empower their business. So there's a lot of that, especially this year during COVID. I think a lot of governments like at ESG, in Singapore, programs in Indonesia, which helping SMEs onboard onto e-commerce. But also there's a depth where you're trying to build core talents around AI or cybersecurity, blockchain, all these things in some of these parts of the world, especially in Singapore. So I think a lot of these things pieced together really improve the ecosystem.
Steve, I just want to ping you on this one as well, through the lens of some of the earlier stage companies. You mentioned over 120, 130 portfolio companies. Do you agree with Santi, and any other sort of thoughts around some of those key positive changes?
I definitely agree with what Santi said. I think the external environment's got a lot more attractive. Countries have continued to mature, GDPs have continued to grow, urbanizations continue to take place, and as a result, the startup ecosystem now is a night and day difference compared to what it was, say, 7 or 8 years ago. If you think about the depth of the capital markets now in the region in terms of startup support, everything from $30,000 seed money to hundreds of millions of dollars sort of PE growth capital now, and increasingly corporates, governments, increasingly segmented, whether it's B2B, B2C, deep tech focus taking place, angel syndicates, and also a support mechanism around mentoring. Founders that, for example, have built businesses are now going on to reinvest and also then support the ecosystem as well, which didn't exist before. A whole bunch of events like this and media, which is focused around the ecosystem. So the role models didn't really exist before, but now you have roughly 10 unicorns across Southeast Asia. You've got probably another 20 or so wannabes or rising stars coming, and so those role models have acted as an inspiration, I think, also for people who perhaps previously weren't considering startup to now come into the ecosystem. So the quality of the founders that I see now compared to perhaps 5 or 6 years ago is again night and day difference. And so I'm just pleased I'm not starting PropertyGuru now versus 10 years ago. The quality of the founders is a lot stronger now, and so it's really, really exciting. And I think that particularly that investment and support infrastructure that exists now is a night and day difference compared to what it was a few years ago.
It's an interesting point, isn't it? The intangible value of the human capital maturity that's occurred here in this part of the world over the last decade, and the compound effect of that knowledge, that experience, is not talked about as much as it should be. On the human impact side and how it sort of translates into the business opportunity and challenges, we've obviously had, and Santi touched on this earlier, we've obviously had a tumultuous year with COVID, and clearly it's had such a profound impact on both economies and obviously livelihoods. So really keen to understand our initial read as to the impact, both from a positive and negative perspective, on the investable opportunity set here in Southeast Asia. I suspect there are some accelerants as a result of COVID, but there are also some challenges. And on this, maybe I'll turn to you, Saurabh, for your thoughts. And I'd love to pick up on this thread with others as well.
Sure, Rajeev. Look, I think clearly it's undeniable that there has been a short-term, impact from COVID. And it will sort of, have impact, call it, for the next sort of, few quarters in some of the countries in Southeast Asia. But, our belief is that the long-term fundamentals are still very intact. Some of the trends I was talking about earlier, right? The middle class expansion, the rise of the mass affluent. I mean, these are such unstoppable trends that, we believe that they'll continue to provide a multi-year runway for growth. And even on the, health response side, even many countries in Southeast Asia have done a tremendous job, right? Singapore, Vietnam, Thailand. They've all sort of, done a phenomenal job sort of arresting the issue. And very quickly, these countries should be back on their feet. If you look at Vietnam, and you could argue that it's probably the only bright spot in the entire world, right? It's going to have a relatively robust GDP growth. The country is going to benefit in many ways as, supply chains move from North Asia to sort of, to Vietnam. So I would say quite well positioned that way. And some of the other countries that, are a little behind, Indonesia, Philippines in due course should be able to sort of resolve the issue. When you look at things in our own portfolio, there was certainly an initial adjustment period, right? Sort of shoring up the balance sheet where it was necessary, right sizing the cost structure. But when you look at things today, everything's sort of humming along, and many of the businesses in our portfolio have continued to accelerate, and both in the old economy side and the new economy side. So if I were to sort of give you an example, Momo, our digital payments, the largest digital payments provider in Vietnam, has seen acceleration in their business as users are sort of, kind of continuing to use sort of online payments and moving away from cash. A business in Singapore called Circles, which is a digital telco, is continuing to disrupt the traditional telcos through their cloud-based operating system. On the old economy side, we have a business called BW Industrial. It's an industrial parks platform. And BW is sort of providing ready-made factories for businesses that are then sort of moving from, their supply chains from China to sort of Vietnam. So quite well positioned, I would say, through this. And again, when you take a long-term view, I think the story is very much intact. I do think there is a challenge around travel. Frankly, to do new deals for investors like us, you want to look people in the eye. You're getting in a long-term relationship with someone. And in that respect, one of the things that served us well this year is, we do have local presence in each of the countries, and many of our investments have been through platforms. So we've continued to deploy capital. But, I think this is, again, a temporary issue and hopefully a matter of a few months and should resolve itself quickly.
Interesting. Santi, any thoughts to what Saurabh said? And I'd love to bring Nick into this dialogue as well around COVID being sort of an accelerant in many respects, but also some challenges. Thoughts from you?
Yeah, maybe let me share, because we did a study collaboration with the World Economic Forum this year precisely on this topic. And we surveyed about close to 70,000 youth across ASEAN, age 16-35. And, it's just a few kind of numbers I thought really stood out. One is like about 87% of people we surveyed say that they have increased usage of digital tools a lot. 42% learn new tools, new apps they never used before in their life. And probably most importantly, we found the majority of the people say that they don't think this is a one-time thing. They don't think this is a surge, temporary pre-COVID. They think this is a permanent change that will drive and become a new normal in the way they do things, whether it's consumption, learning, working, and doing business. And some of the top applications that seem benefit the boost are social media, e-commerce, online education, virtual meetings, and video streaming. So I think these are some of the key trends that we see, some of the sectors benefit. And I think this part that it will remain sticky is probably one of the most powerful finding that we got.
Fantastic. Nick, any thoughts on the COVID impact?
Well, I think, first of all, any conversation about COVID, before we even talk about the impact on technology, I think we have to start by just expressing tremendous sympathy and really condolences for those lives that have been lost. Across Southeast Asia, over 1 million people have been confirmed to have the disease. We all know it's far more than that. 25,000 people have died. These are mothers and fathers, daughters and sons. So I think first and foremost, before as an industry, we applaud the acceleration of technology. I think we all collectively, I know all of us on the panel, express our deepest condolences for those that have lost their lives. And I think we must all vow never for this to happen again, through public health measures and otherwise. But what is clear as well is that families have had to adapt. We are fortunate through no pure foresight on our part that we invested in one of Southeast Asia's 2 primary ed tech companies. just the month before the epidemic began, and we have seen an absolute ballooning of customer registrations seeking to educate their children. One interesting, maybe just anecdotal data point that sort of emphasizes the behavioral change. Before COVID, this was a platform that children typically paid for with their pocket money, a bit like Garena Games. Post-COVID, you suddenly began to have parents signing their children up for the platform. That sort of said a lot to us, that suddenly this has become really real in terms of how people are adapting. But at the end of the day, I think our entire industry is genuinely part of the solution here in terms of getting the wheels turning again for the economy. And I'm very optimistic about what the economic and social impact will be of all that innovation.
That's fantastic. And I think as a collective group, we totally concur about the role that technology investing and capital allocation can play in cushioning this significant impact and the human capital toll that it's taken on so many people this year. I think our role is a very important one. Just to shift gears again, I do want to turn to one thing that comes up incredibly often, and that is trends relating to valuations, particularly in technology, and the implications that they may have for the region. We've obviously seen multiples accrete significantly in the second half of the year. We saw a very large transaction in enterprise, and Nick, you referenced enterprise, the rise of enterprise potentially here in this part of the world with Slack and Salesforce earlier in the week. What do you think the transmission mechanisms are to this part of the world, and how idiosyncratic or not are they compared to what we're seeing in the States, Europe, and elsewhere? And I say that both from a public market lens as well as a private market lens. Are they at all changing the underwriting thesis that you're looking at in terms of return expectations, tenure for exits, and obviously exits one of the themes of the conversation here. Maybe Saurabh, I'll turn to you, and Nick, I'd love your perspective on this as well.
That's a good question, Rajeev. Look, it's always hard to answer any question around valuation, right? I mean, all investors will always complain that valuation's going up. But look, in all seriousness, look, Southeast Asia has become a more popular investment destination, and valuations have gone up, especially for high quality businesses. But I think to your question, arguably it hasn't gone up as much as in places like, US and China. And, you can all argue, and we won't have the answer on whether, these valuations are right or not. And I thank God for not being a public investor in these times. I would know when to put money and when to sell. But for our business, look, valuations are clearly important, but I would say they're one piece of the bigger puzzle, right? For us, what's important is the overall opportunity for value creation, right? So in that respect, that's what drives our returns, right? So we're looking for opportunities where, we can get into long-term partnerships with good management teams, where we can jump in with both feet and work with them to add value, to create value, right? And when we do that, that sort of, in essence, allows us to buy down the valuations, if you will. The other thing, we have, our experiences, look, entrepreneurs in Southeast Asia are not always looking to maximize every single dollar on valuation. I think one of the things that, we've seen people appreciate a lot is the knowledge and expertise you can bring to businesses, right? Because the talent pool in Southeast Asia is not yet as deep, right? So for someone like us, when we come in with sort of over 25 years of, track record and experience in India, where we've invested in businesses and bring some knowledge and learnings, which in many cases are directly applicable, that allows us to, have a more constructive dialogue early on around valuation. And we've seen kind of, creates a better opportunity and entry point for us. So I would say, again, I think the value creation mindset and the value add mindset kind of allows us to, create similar returns without having to change anything fundamentally in our kind of investment approach, if you think about it on a risk-adjusted basis.
Absolutely, I totally hear you on the value creation point. Nick, your views on what we're seeing from an overall valuation perspective?
I think it's important, Rajeev, to look at it through an empirical lens, a data-driven lens. One of the things that we're fond of doing is comparing China, India, and Southeast Asia side by side in terms of what's happening, and then in a slightly finer grained way, looking at the Series A and B ecosystem, which is sort of $1 to $20 million checks, a little bit of more C and D, 20 to 100, and then 100 plus. And when you take that finer grained empirical view, you see some very interesting disparities. So I'm just going to share with the audience and the rest of the panel something that struck us as very interesting. Let's start with China. China, $1 million to $20 million checks. At this point of year, as of a few days ago, relative to last year, it's up 32%. That's fairly significant. 20 to 100, up 44%. 100 plus, up 125%. We are shocked there are no startups in China putting up statues of Jay Powell in their front lobby. We're shocked. We recommend it. India, 1 to 20, up 34%. India, 20 to 100, up 21%. India, 100 plus, up 136%. Again, there ought to be wooden statues of Jay Powell across India driving that kind of liquidity. But here's the interesting thing. Southeast Asia, 1 to 20, up 19%. Okay. Southeast Asia, 20 to 100, down 4%. And Southeast Asia 100 plus, up 134%. What do you conclude from that 3x3 grid? You conclude that check sizes north of $100 million are the direct beneficiaries of the Federal Reserve's decision to take its balance sheet from 18% of US GDP to 33% in the span of 13 months. That capital is looking for a home. It's too big in terms of its caliber to go through small pipes. And that's why you see in Southeast Asia, remarkably and persistently so, in a world awash with liquidity, fundraising for growth stage companies is down versus the previous year. We think that is one of the most interesting commercial opportunities that we are going to get to experience in our careers.
It's really interesting you say that. And obviously the world is flush with excess liquidity, looking for an appropriate home. And so it'll be interesting to see how that translates into this part of the world, given the statistics you just indicated. I want to stay with you, Nick, and then I want to go back around the panel. Just around, one of the things we want to try and tie this back to is around exit and definitionally what that means. But people always talk about exits in the context of going public. And I'm always curious to get a perspective as to what that actually means in terms of the size of a company, the maturity of a company, the tenure of a business, the number of financing rounds. I mean, there's so many different facets that affect a business's readiness to potentially go public. And obviously, it's a very complex and nuanced answer, but I'd love your thoughts on that, Nick, and anyone else that has a view on it.
I'm very happy to. And Rajeev, as you know, we've talked about this over dinner not long ago. This is a topic sort of close to our hearts at Asia Partners, and we've had the pleasure of being part of the journey of C and its IPO. I'll make two observations. Observation number one, the purpose of going public is not to exit. The purpose of going public is that you can raise post-IPO converts. Now, that may throw a lot of people for a curveball because everybody thinks of the exit as this sort of like graduation. Quite the opposite. By going public, you can access significantly lower cost capital in the form of public market converts. And if you're looking for two examples of that, look no further than Amazon, which in 1999 raised a $900 million convert post-IPO, which saved the company and helped Jeff now be worth $180 billion. Or C, which has actually done some fantastically sophisticated work with converts to help build Shopee and to put light years ahead of competition in the region. So I want to emphasize that point. The IPO is a tool and a damn good one from an operational perspective. Now, what does it take to get to that point? We've again tried to think about this in sort of an empirical way. C is very special because it was a rather large company at the time of its IPO and very well positioned. But as a simple rule, we call it the rule of 25. If your business in the most recent fiscal year has had $25 million of gross profit, you are a contender. And we can say that because if you look at the last 20 years of IPOs, whether it be Asia Pacific IPOs or Asian companies going public in America, tech or non-tech, it all points to a single conclusion: $25 million of gross profit and above. However, you may not like the valuation you get. It may be lower than what you hope. And that's the final observation I would share with entrepreneurs that are listening today. We call it the spike. If you think about the enterprise value to revenue multiple, the revenue multiple, if you will, for your company, it spikes when you are imminently or have just become cash flow positive for the business. It's a remarkable fact, and you can look at it in a very clear black and white way. So when your company, from a business planning perspective, is at 25 million of gross profit, and you are imminently or already cash flow positive, that is when the iron is white hot, and you ought to do it.
Interesting metrics for us all to think through, Nick. Thank you for that. I'm conscious of time, and so I do want to go around the panel one last time on a question that I think often comes up as an investor in the region. We've obviously all been privy to a very, very vibrant venture capital and growth equity environment across the region over a number of years now. I'd say the better part of a decade. And I think the amount of capital that's been raised to support prospective companies is incredibly exciting on a go-forward basis. And I thought it might be interesting for each of us here as panelists to share one or two stories or anecdotes that they can point to that may demonstrate what they think the continued opportunity is as we look forward, and what they take as inspiration in their journey in this part of the world for the future. And maybe I'll start with you, Saurabh, and then we'll go around the panelists, but would love your perspective on that.
Sure, Rajeev. It's a good question, and I do have a recent and relevant example that I'm happy to share. There's a business called Converge in the Philippines, which some of the audience may know is the fastest growing and the only pure play fiber broadband player in the country. We had backed the business in late 2019 to support them in pursuing a challenger strategy against an incumbent duopoly in what's a deeply underpenetrated market. And fast forward to today, not much time has passed, but if you look at the business today, from being a challenger, this business has very quickly transformed to being the most dominant fiber broadband player in the country. It's already surpassed one of the incumbents in size. It's capturing a lion's share of the market today. And all this while the business is delivering 70-80% growth, 50+% EBITDA margins, and 20+% ROIC, which is quite rare in a capital intensive business of this nature. So on the back of all of this progress, this quarter we IPO'd Converge, $600 million IPO, largest IPO in the Philippines. Very successful, very strong outcome, for the company. Agree with Nick. It kind of, the capital that comes lowers your cost of capital for future sort of capex, puts the company on a really, really nice path. But the outcomes, really, impressive, especially considering that Philippines is amongst the worst performing public equity markets across the globe this year. And the fact that Philippines is amongst the hardest hit countries from a COVID standpoint this year. So why do I use this example, right? If you have a good business, if you have a robust business, then, irrespective of the exogenous factors, you can get to a point of monetization or exit or capital raising. So think to people, the audience here, one of the things I would really stress on, right? Some of the things that Steve was touching on earlier, build a good business, have a good path to profitability, and then, the rest sort of follows.
Incredibly valuable perspective, Saurabh. Steve, your view on that? I suspect you concur.
Of course. I think a lot of the points have been made around. There's just I think we're right at the very, very start of Southeast Asia opportunity. If you think about the penetration online, it's still single digits in many countries. If I think about my own experience, with PropertyGuru, when we started out, everyone was everything was offline. The real estate agents were advertising offline, the property developers were advertising offline, all of the newspapers, a little bit of TV, the consumers were all using newspapers. And you kind of fast forward now, it's like kind of 25 million people a month who are using online, and those other media have kind of disappeared. And so, but at the same time, there's a huge opportunity. 700 million people, it's $250 billion per annum real estate market, and online is just scratching the surface in that. And so, I think when we think about opportunities, we're just right at the very, very start. That urbanization is still taking place. The infrastructure investment in terms of mobile and internet penetration is taking place. GDP per capita is taking place, and so that kind of rise of mass affluent and large cities and large towns growing presents a huge opportunity in Southeast Asia. So, but as I said, I think we're right at the very, very start, which is why I'm so excited about the opportunity.
Great, thanks, Steve. Santi?
Let me bring perhaps slightly a different perspective, but building on what Nick said earlier, that really resonate with me, and I think the philosopher firm that the tech companies, I think we really have to be part of a solution during this very challenging global economic situation and health situation. And I think what was been kind of shining sort of beacon of light I see is the collaboration of the private sector and the public sector that came together and trying to help and solve a lot of problems at unprecedented kind of pace. From a tech perspective, for example, we have worked closely with governments around the region, policymakers, to help onboard thousands, if not more, of SMEs, traditional SMEs, entrepreneurs, help them connect to the market, allow consumers in a remote area who may have to stay at home, have access to essential goods, adopt the new mode of payments, in a world where you don't want to touch paper. So all these things, I think there's a lot more that as industry, we can come together and do and work closely with the policymakers and needs to be done. So I think that's this COVID, if there's any kind of silver lining to it, is that we have started to see this kind of collaboration, different players of the ecosystem coming closer together. And so I hope to see that continue even after this.
Thanks, Santi. That makes total sense. And Nick?
I just want to share a very personal story of one of my heroes in entrepreneurship. He's a homegrown Singapore entrepreneur named Amit Saurabh. Some of you may know him. He used to be the head of Southeast Asia for a public company called Make My Trip, ran the region. And he had this notion that it was possible to completely disrupt and really up quality level budget hotels, basically create sort of days in or holiday inn, but for Southeast Asia. And he, by golly, he did it. He founded the company 5 years ago, took a massive pay cut, pulled his kids out of private schools, and has been building this business. And what's just so mind-blowing for me is in a time where every headline couldn't be worse about hospitality going down the tubes and airlines furloughing workers, Amit has managed to grow his revenues. These are US dollar GAAP revenues, 5x from Q2 2019 to Q2 2020. Mind-blowing, right? And he's grown them about 2.5x. It's slowing down from Q3 2019 to Q3 2020. I just look at that and I think, my goodness, that's the definition of resilience and adaptability and success in a global crisis like this. So my heart goes out to CEOs like Amit, and really I'm inspired by them because they turn the lemons into lemonade. They find a way to adapt, and they come out of these crises, let's just call it what it is, a hell of a lot stronger than where they were before. So I really tip my hat to all the entrepreneurs that are doing that right now in our ecosystem.
Well, that's a wonderful way to, and an inspiring set of stories, I would say, to conclude today's session. We're incredibly grateful for our panelists' time today and their insights and contributions. I think we all have a very important role to play in fostering the continued evolution and development of the investing industry, operating industry, and entrepreneurial industry that I think can really help catalyze significant growth, change, and evolution in our part of the world. So thank you all again for a wonderful session, and we hope to see you all very soon again. Thanks.
Thanks, Rajeev.
Thank you. Thanks, Rajeev. Thanks, everyone.
Thank you very much. Thank you, everyone.
Thank you.